Hi everyone, Gianni DePoccia here with you for TheoTrade, and today is Tuesday, April 8th, 2025. And what started off as a pretty good day has once again turned nasty. Now, there still is some time left in this day before the close, but as you can see here, the S&P has given back all of its gains from earlier in the day, and it looks to have been yet another short covering rally. So I'm going to be very blunt. This is not a market or a tape to be a hero in. I'm echoing what Don, others, and myself have been saying. There are no winners, there are no losers in this tape. There are only survivors. What comes on the other side of this decline can be life changing if you play your cards right. And that means right now, playing your cards right now, keeping a healthy amount of cash on hand. If you're losing sleep based on any positions that you are having open right now, you're trading way too large and you need to dial it back because this is a volatile market. The trend is down. The trend is down. We are seeing lower lows and lower highs, and I discussed some downside targets in the TheoTrade live room earlier today, and I'm still in the camp that we could see another 15 to 20% downside in this market. When I look at this index, the S&P here from a technical standpoint, I do see the setup for what is called a bear flag, and that conservatively is pointing to another 500 points lower on the S&P. So that would be another 10% drop. Now, where would we go from here on this so-called bear flag? Well, we have established what is known as the flagpole. Okay, so we have formed this flagpole here. What comes next? The second part of the bear flag pattern is known as the flagging. That happens in bull flags too, which is just the same pattern flipped upside down in a bullish manner. So, I will not be surprised if we see this market go sideways for several sessions, even a couple of weeks, digest the losses because we are very oversold right now in the near term, but there's no signs of downside momentum waning in this market. And just like we look for cases of divergence to the upside in bullish markets or a slowdown in upside momentum when the market is rising, we look for that similarly to the downside. Think about it like this. If you are driving in your car, okay, you don't turn going at full speed. You hit the brakes first before you turn. Markets move the same way. The markets need to pump the brakes before they can reverse back higher. They're still not pumping the brakes. These one day or like multi-hour rallies are nothing more than short sellers covering their positions. Remember, every short seller today is a buyer tomorrow or sometime in the near future. So, in this tape, it just pays to be patient. The only thing I really have in the portfolio that has been weathering it all right are some gold stocks. But you take a look at some other markets. The NASDAQ is up slightly right now, but I wouldn't be surprised if it finished in negative territory on the day. The Dow is outperforming right now on a relative basis, but that's to be expected. Whenever markets decline or enter bearish trends, the Dow tends to decline the least, and the NASDAQ tends to decline the most. We like to see the NASDAQ operate as a leading indicator. What sectors are we going to be looking at for signs that the market is bottoming out? Well, first and foremost, we don't have any signs of that just yet, okay? But the big thing is going to be looking for growth related sectors. What are growth related sectors? You have technology, you have semiconductors, consumer discretionary. We want to see those sectors leading out of the lows. Right now, okay, they've been leading to the downside. That is not bullish. There is no indication at this time that any of the sectors that point to strong stock performances are or have bottomed. So we still need to be very cautious. You take a look at some of the big tech names. Apple, I wouldn't be surprised to see Apple. I have an alert here for Apple to drop to 150. If Apple drops to 150, I'll start nibbling again. I'll start nibbling again. Okay. Tesla. Tesla actually holding up all right, consolidating its losses, but I'm a little concerned about Tesla if it starts to break below 200, 210. Put it this way, I wouldn't be surprised if Elon Musk had to leave his position in the White House to go save his company. I'll just leave it at that. Nvidia is actually looking good today, and I think it's responsible for a lot of the bounce, but we did break below this technical support level in the 105, 115 area. So that's a level that we're looking to sell rallies into. And we're seeing lower lows and lower highs. The trend is solidly to the downside in the near term here, especially since we took out that low from August 5th. And we're seeing that in a lot of markets, the lows from last summer taken out to the downside. If you take a look at the VIX is starting to climb again. I think this is going to continue higher. How high can it get? Who knows? But the VIX futures have already made a new high. The VIX index has not yet, but I would be looking for that to make a new high soon. I'm not really a fan of doing technical analysis on the VIX. I don't think it's possible. But if you look at past instances with how high the VIX spiked, we haven't even taken out the August 5th high in the VIX, haven't touched the March 2020 high. But I want to be very clear, there is no precedent to this decline. Okay, yes, we can look at percentage declines during past bear markets, but there has been no situation in modern financial history where we have essentially pulled the plug on the global trade order. The global trade system is out the window, and it's going to take time for the chess pieces to be moved back around. So this is not a tape to be a hero. Bitcoin and crypto still looking weak. Bitcoin looked good on Friday, but got the rug pull coming into the new week, and so those are trending lower. Ethereum probably has another few $100 to drop here in Bitcoin. I'm looking at 70, 72,000 for some more support, and right now, we're only about $7,000 away from that at the moment. Crude oil continues to drop off. This is probably one of the more recessionary indicators I'm seeing right now, because if you recall, even just a couple of weeks ago, we were talking about how copper was trading at new all-time highs, and that was not a signal that you often see when a market or when an economy is about to go into recession. Well, copper has since crashed. Copper has dropped over 20%. This is now in a recessionary signal. Okay. I want to take a look at bonds. Bonds are getting sold hard. There's been a lot of chatter lately, and talked about this in the Theo live room today as well, that China is selling their treasuries in order to raise dollars to support the yuan. Well, they're not going to be able to support the yuan that much longer. And I would also like to bring your attention to the fact that Scott Bessent was a big player, a key player, when the Bank of England broke in the 90s and the pound got crushed. Okay. Has he been tasked with something similar in the Trump administration as it concerns China? Okay. So China's been selling off pretty hard. I do think that once the dust settles, the Chinese market will provide some opportunities. Okay. But at the moment, there are some big issues, not just in China, but you take a look at European markets too. They've been absolutely hammered. Germany, which was so strong, the Swiss market, which has been very strong as well, all selling off very hard. Now, even gold and silver have not escaped the selling. You take a look at gold; we haven't really corrected that hard. About a not well, still short about 10%, not even, but I am looking for some support here in gold in the not so distant future. Yesterday, silver's low could have been a washout, but the only names that I really am carrying right now are precious metal miners. Still have AGI on the books. Okay, this is up today, showing some relative strength. KGC is another one that's holding up all right, and they're going sideways near the high. So that is, price action that I can get behind. Agnico Eagle Mines. So I'm still staying very nimble and heavy in cash, looking to make it through this storm. No rush to buy anything anytime soon. I know it can be tempting to jump into the market when you see those, short squeeze rallies like we did this morning. You better believe a lot of people chased that rally this morning, but this has all the marks of a corrective rally and a short squeeze. And it's within the greater context of a downtrend that is in effect in this market. So we'll get through it, guys. Just it's all about being patient and recognizing that what comes on the other side of this can be life changing. So hold on, because we'll get through this, and I'm looking forward to the market opportunities when the time comes. I'll keep you posted. See you in the TheoTrade chat room. Thank you.